Hey guys, Lance Martin, Coldwell Banker Town and Country, and we are back for our February market snapshot. I'm going to do things a little bit different. I've been watching some of the prior snapshots, and what I'm finding myself is I'm repeating a lot of stuff, assuming that I've got a lot of first-time viewers. So this is the deal. I'm not going to do that. I'm hoping we're creating a little bit of an audience, and explaining the same thing month over month, I think is probably going to not be helpful to my existing audience. So this is the deal. If I go through some stuff, I might make reference to a video that I've done in the past. Right now, we've got, I think, a year and a half of these stacked up. So we're not going to spend as much time doing some of the same stuff over and over and over. Having said that, here is my link tree. So if you want some information on me and some of the stuff, there you go. You can take a snapshot of that. This link tree code, I want to clean that up, and it's a little bit grainy, but anyway, it will still work. That link tree will take you to all of the things that we've got going on with our markets forecast on March 15th. We'll talk a little bit more about that, I think, now, and then also at the end. So we partnered up with UCR, March 15th. It says Riverside Convention Center. That's wrong. I need to get that cleaned up. We're going to be at the Fox Theater, and all the other links and everything that you're going to see will show the Fox Theater. So that's my bad for not cleaning that up. So we're about 5 weeks away, and it's going to be here before you know it. We're super stoked. This is less than half of the speakers that we currently have queued up. Again, if you want to go, hit the link tree. The website's being updated almost every single day. I've added 3 speakers this week. In the next 10 days, the entire agenda in the speaker lineup will be filled out. But again, this is just a snapshot of a few. I'll tell you, I'm actually going to go back to this because I don't want to forget about it. For those of you that are looking for an economist that says, hey, guess what? We're not going to have a recession in 2023. We have that. Chris Thornburg, in effect, and he's public. If you follow Chris, he'll tell you, I don't think we're going to have a recession in 2023. Got some things that he doesn't like, some things he does like, but generally he's not calling for a recession. So for those of you that are like, well, I'd like to see somebody who says there's going to be a recession in 2023. Well, we're going to have that too. So we've got an economist from Claremont McKenna, Manfred Kyle, who you guys have seen before. He's going to do a much abbreviated forecast, but I talked to him 2 days ago and he says, hey, this is the deal. I think Chris is wrong. We're going to have a recession, and this is why. So guess what? We'll have a little bit for everybody, or we're going to leave everybody confused, one or the other. So stay tuned for that, but we're about a month away. A little bit of news of interest. We are continuing to keep an eye on Chairman Powell. Yes, he did come out and do another 0.25% interest basis point increase last week. The last 7 days or so have been pretty tough on interest rates. We've had a lot of improvements on mortgage interest rates over the last month or so. Last 7 days, we've given a lot of that back. A lot of that has to do with Chairman Powell, the rate that he increased last week, and then he made some comments earlier this week. It's kind of spun us off a little bit, but I think we're going to be okay. There's also a jobs report that came out that there seems to be some dispute as to whether those numbers are truly accurate. For those of you that really follow that, I think the number was that we were expecting $100,000, $200,000 or dollars, goodness gracious, 100 to 200,000 jobs created in that report that came out last week. Instead of that, the number was like 700,000 jobs. There's a number in there that's kind of an adjustment, depending upon who you are and how you feel about those things. You're like, that adjustment's bullshit, pardon my language, and it's meaningless. Well, you don't see that reported a lot, so we'll see how that shakes out. But I threw up this slide from CoreLogic. I was given this information by Barry Habib's group with MBS Highway, and there was a little headline down here that you can't see, but it basically says, hey, CoreLogic comes out every month, and they say this is what we think's going on, and this is where they currently were. This is what we've seen month over month, and this would have been December to January, negative, and year over year, a positive 6.9%. These are national numbers, by the way. Well, CoreLogic says, well, month over month, forecast this month coming to next, we're going to see a decline month over month, but year over year, they're actually forecasting an increase in property values nationally. I guess let's call it for 2023. There might be a month off or so in there. So we shall see. That's different than CAR has an 8.8 decrease in property values, median property values, or excuse me, average property values in the state of California. 8.8 decline is what their current forecast is. So we'll see how that changes. So, all right, so let's jump right in. We're going to jump into our Inland Southern California market update. As always, I don't know why we start with LA County, but we're going to start with LA County. So here we are. So this is the deal, guys. We're going to see what happens. But what I'm seeing in LA, in Riverside, San Bernardino's got some weird stuff going on. But what I've seen in the last couple of months is basically a little bit of stability in these prices, more or less flat. So this is your median price for 2 years in LA County. There is your 12-month chart. Again, very flat. I mean, basically flat for the last 3 months. I left this up. This is the exact same chart that I did last month. This is the 2022 year-to-date number. So I'll probably take that out. I just looked at it and I was going to delete it. And I said, we'll leave it in for another month. So this is where we finished 2022. And this is the one that I think a lot of us are probably keeping our eye on the most. This is the one that I'm certainly keeping an eye on. And this is where we are from peak to current. So peak, LA County, was May of 2022. That's where we are January 31st of 2023. And that's I'll skip ahead, but that's an 11.2% decrease in median property values in the county of LA from May to the end of January. By the way, today is February 10th. I'm hoping Adam's going to get this out of production today, later this evening, and my plan is to post this Friday evening, February 10th. I mention that now because there's a couple other dates that are a little older, and I just want to make sure February 10th is when this information is being published. So this is your LA County peak to current, 11%, 11.2% drop from May to here. We'll see what that means. So here are the numbers. Median price in LA County, $750. 12 months, okay, 2.3% decrease. That's the 2.3 down from the 768. This is where we were 2 years ago. This is where a lot of people are really following this, are saying everybody just relax. We're still up 11% from 2 years ago, this gigantic COVID run-up that we've had, so it's 11%. There's that 11.2 from peak to where we currently are. Big number of people are taking a look at. And remember earlier I said it's been basically flat for the last couple of months. Well, it's truly been flat. The December, January numbers unchanged, identical, $750,000 median price for LA. So where are we with supply and demand? LA County is still, seems like it's lagging a little bit. I don't know if that's a price thing or there's some other issues going on there. We've seen the inventory continue to drop. I don't like to see this inventory continuing to drop. This was last year. We started to see that inventory tick up from December to January. Well, we didn't see that, the last 3 months. We continue to see the LA County inventory drop. That's rough. But the good news, if you want to look at this little itty blue bar over here, it's bigger than it was the month before. Thank God. If you watch my January snapshot, which covers December, it's just brutal. If you look at these numbers, these blue bars or purple bars are buyers and sellers coming together, pending transactions, lower, okay? Now, it doesn't look like it's up much, but it's up. I'll take it. It's a good sign. And generally speaking, January was a green shoot for everybody who follows this stuff in my business. January looked pretty damn good. If January continued the trend for the last 3-4 months, which were horrible, I would feel a little bit differently today, if I'm being honest with you. So this is the 24-month LA County. This is just the isolated. I left up the good and the bad. That's from last month. I'll probably pull that off. It is what it is. But again, you can kind of see it a little bit better, even though it's the same exact chart. I just have the 2 years isolated. But this inventory, gosh, it's just brutal. It's absolutely brutal. So this chart's super interesting. I took this out. I put it back in. This is our supply of inventory, or absorption rate is the term I normally use. As this goes down, which it's now going down again, basically, even though we have less inventory, the buyers have returned. You got to go back to look at the buyers, even though they're not a huge number of buyers, they've returned. Less inventory, more buyers, the absorption rate starts to go down and in effect stabilizes prices. So we shall see. So what do the numbers look like? Homes for sale in LA County. Basically, let's call it negative 2% over the last 2 years, negative 14% negative 1.8%, 2% over the last 12 months, 14% over the last 2 years. As bad as these numbers are, these are the ones that I kind of cry a little bit. I own and operate a real estate office. We pay the rent by selling houses. When we don't put buyers and sellers together, fewer transactions, that's a pain point for us. These are 26% fewer than a year ago, 32% fewer than 2 years ago. But you got to remember, these are being compared to COVID years. We had fantastic Januaries in 2022 and 2021. We generally don't have fantastic Januaries. So the fact that these numbers are down, and if you look at last month's snapshot, these numbers were like 40%. that's a big number. I mean, good Lord, 25% decrease in sales year over year. We don't like that. But we're comparing them to some extraordinary prior times. So I take pause with that a little bit and say, okay, I think we might be okay. So Riverside County, let's do Riverside. You're going to see some massive differences. However, the first similarity you're going to find, price is stable. That's the far bar is January, as of January 31st. January 31st. I skipped ahead a month. So this is 10 days ago. This was end of December, January 31st, same exact number. January 31st, December 31st, flat. No change in median price. Stability? I don't know. I guess we'll see. Here's the same chart, just isolated for 12 months. And finish, again, this is last year, 2022, January to December. I left that on. I'll probably pull it off next month. Here's our peak to current. LA County was 11%, 11.1, I think, 8.8. Ironically, that 8.8 number is the number that's on the California Association of Realtors forecast for the decline in property values for the entire year of 2023, the current forecast coming out. So we just happened to coincidentally land on that 8.8 number in Riverside County as of peak to current. So, and if my predictions hold true, that number's going to start to get smaller, meaning it's not going to go 9% lower, 10% lower, 15% lower. I think that negative number is going to become smaller, in effect meaning I'm anticipating these property values to start to increase. We'll see what happens next month. Are they going to be big? Honestly, I hope not. If we just had a flat chart or close to a flat chart for all of 2023, I would be ecstatic. But we'll see what happens. We've definitely seen some stability in the last 2 months, so I love that. Last 12 months for Riverside County, we're down 2.7%. From peak, 8.8, that's the number we just talked about. But again, just like LA County, except better, this is why I'm not freaking out. This is why this is not 2008. This is why this is not even. I went to lunch with Mike Novak-Smith. Hey, Mike, hope you're doing well. Mike had said, hey, there's some similarities to this market, but it's not a similarity to a 2008 market. It's more of a similarity to like a 1992, 93 market. Mike and I have been doing this a very, very long time. I really absorbed that thought, and I said, you know what, I think you might be right. We don't have time to get into what happened in 1992, 93, but let's put it this way. It was a rough market, but it certainly wasn't a 2008, Great Recession type stuff. So again, this 17.4% increase in Riverside County over 24 months, frankly, it softens this. Now, if you bought your house in May of last year and you've lost a little bit of equity from May of last year, then you're like, screw that, Lance. That doesn't soften it at all. I'm feeling some pain. I get that. And there's going to have different boxes for different folks. But generally speaking, the majority of the market is okay. Nobody should be panicking out here at the current level of price destruction that we have seen. Here's the supply and demand numbers for Riverside County. Again, we've got fewer listings, but this red chart is on the uptrend. The LA County chart wasn't. So even though these numbers are still smaller, and even though I would have loved to see this tick up from January to December, it didn't, but it's still higher than it was before. And look at our nice little bluish purple bar over here. There, again, down, 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 down. This is December. Look what we did in January. So this is why everybody in my business is like, whew, thank God we seem to have pulled ourselves back to something that we can actually run a business on in January. So that feels pretty good. Now we'll see what happens in February. But January openings, buyers and sellers coming together, felt pretty good. So I'll pause here for a minute just to focus on this blue bar. If we thought buyers said, forget this, I want nothing to do with real estate in Riverside County, I'm out, for whatever reason. They think we're going to have a crash, interest rates are just too high, the affordability isn't what they need to be, they can no longer buy that house in that neighborhood. Well, if you felt that way in December, well, a significant number of people did not feel that way in January. They came back into the market and ultimately bought houses, which is why those property values leveled out on a lower supply. So I kind of feel good about that. Again, same chart we had up last month. I'm going to blow past that. Just like with LA County, this absorption rate, all this means when these bars get lower is you've got more buyers and sellers coming together. So Obviously, buyers re-entered the market in January, and that number went down dramatically to 2.2 months supply of inventory. This is another reason why I think it's entirely possible we might have actually seen the floor in the price destruction. We might have seen that in January or February, or excuse me, December or January, just passed. Why? Because again, we're back down to a 2-month supply of inventory. That's a low number of inventory. So assuming there's some sellers out there and there's some buyers out there, in theory, we should start to see some price, shall I say it, appreciation. Drew and Drake and I just put a property in escrow. It's an entry-level condo in Moreno Valley, but I told the seller, I said, hey, you know what, if we get an offer for $250, this house it's kind of beat, it needs some love, take it and run with it. Finally got the tenant out, put it on the market, and I don't know, I might be off by a little bit. Within 5 to 7 days, 5 to 7 offers, a couple of them cash, full price at $250, ended up accepting an above asking price. I think we went into escrow at $265, conventional, but a large down payment. So, well, guess what? What did we just see? Well, we just saw price appreciation in January of 2023. Now, granted, that's entry-level Moreno Valley, so we'll see what it means. At any rate, so where are we? So, still not as many houses for sale, 61 to 11, but unlike LA County, 23% more than a year ago, 26% more than 2 years ago. I love Riverside County for that reason alone. Even though these pending numbers are low, again, just like LA County, they were 40% off on the last couple of snapshots that I did. Well, 19.4% off January to January sucks. 16.4% January to January 2 years ago, not good. But again, those are COVID Januaries. Those Januaries were unexpectedly great. So to see a pullback in sales from January to these past Januaries is to be expected. Because I'd have to go back and look at them. Those January sales were probably 20% higher than we had seen them before. So January was a good month in Riverside County. San Bernardino, I have a problem with San Bernardino. I said we had an anomaly in price back here and we kind of corrected it. Well, that anomaly apparently has come back. I don't know what's going on with San Bernardino, but nevertheless, we had a pullback in median price in San Bernardino. For you median price haters, I get it. So we'll have to take a look at what's going on with my chart with San Bernardino price. Interestingly enough, if we didn't have this this jump back up last month, and assuming we were somewhere near, we could sit back and say, well, San Bernardino's bottomed, because we in effect have the same price in January that we had in November. So is that a trend that basically shows some stability? Sure, but that is unusual to see that spike. So like I said last month, I got to continue to dig into San Bernardino County and see what's going on that's causing that. This is the same chart. We're going to blow past that. This is our peak to current, 11%, very similar to LA County. Wasn't that long ago that I said San Bernardino County was outperforming. Well, then you get this, and now we're underperforming again. So right now, as of today, if you want to look at peak to price destruction to today, Riverside County is the star with whatever that number was, 8%. 8% drop. So these are the numbers for San Bernardino, 641,000 medium. It's only a 3% price destruction from the beginning of the year. Peak to current, 11. That's the one that we just looked at. But I'm going to come back to this. In 24 months, San Bernardino County is still 15.3% to the better. And this is where, I know it's a little bit of a broken record, but I'll say it again. This is where a lot of us in the business that said when you had a 20% appreciation in 2020 and a 20% appreciation in 2021, and then in effect, here we are in 2022, 40% appreciation in 2 years during COVID. It's craziness. It's absolute craziness. And guess what? We're paying the price for it right now. We're paying the price, and we're starting to pull back down a little bit to reality. Even a 15% appreciation number over a 24-month window in any given market, even that's too much. 40% is too much. Come on, guys, 3, 4, 5%, appreciation year over year. If this was a 3-year number or a 4-year number that says, hey, where have we gone in the last 3 or 4 years? Oh, hey, guess what? We've got 15% appreciation. I'd say, okay, that's cool. That's healthy. So at any rate, maybe we're getting back into healthy, which I know is difficult for a lot of people who don't feel healthy. There's a lot about this that's very painful for some of the stuff I see as well. But it is what it is. I think we've got a little bit of stability. stability. Supply and demand, same thing. And I just want to focus on buyers. More buyers in the market in San Bernardino County, just like LA, just like San Bernardino. Green shoot for the month of January. We'll see what happens in December. Same chart. We'll blow past that one. Absorption rate, it's current. It looks just like LA and San Bernardino. It's come down. More buyers buying the less properties, but nevertheless, for all the reasons, I think we're going to start to see some price appreciation. Okay? I know some of you are just losing your mind right now because you think the world's going to end and we're going to see it crash, and it very well may. But based upon what I'm looking at right now, and based upon what I think interest rates are going to do, I think we're going to start to see some price appreciation. So again, San Bernardino homes for sale, we're up 10%, just like in Riverside. More houses for sale than a year ago, more houses for sale than 2 years ago. Yes, these are big numbers, but again, it's the whole COVID thing that we were talking about before. But still bigger than Riverside County. So I hate that number. It is what it is. Okay, hey, last month we didn't do a Spotlight City. This month I went back and I did Corona. For those of you who are like, Lance, you did Corona 6 months ago. I did. And I think Corona is kind of a nice little bellwether for us. We don't do any Orange County stuff. Periodically I'll do some Orange County stuff. But I kind of like Corona because you've kind of got that LA, San Bernardino, excuse me, not San Bernardino, LA, Riverside County, Orange County, kind of, sort of. I mean, Corona obviously is bordering Riverside and Orange County. But it's more coastal, certainly, than the rest of the Inland Empire. And also, I was talking to a client who had a property in Corona, and we were having this exact same conversation. And frankly, they're like, "Oh, this is horrible. You know, I don't feel good about it." Oh, let's take a look at what's going on in Corona. Well, I can tell you what's going on in Corona. Price is stable. Okay, prices are stable. Now, the client I was talking to, quite honestly, was super high end in Corona. So that person might say, well, stable in the median for everything in the city of Corona, maybe not so stable in the high-end market, but guys, that's going to be true everywhere. Different segments of the same market perform differently. High-end sometimes does great, and in markets like this, it may suffer. But anyway, that's a stable price trend in Corona. And again, on this 12-month, you can really kind of just see where we're at. I mean, you can't get much more stable than that. I love that. This is the peak to current, though, 12.9%. So that same customer, that client who was telling me, I'm having a hard time in Corona. Well, based upon what we just looked at, Corona has underperformed or performed worse than the other three counties that we just looked at. Not by significantly much, but let's just call it a 13% drop from peak. So I understand the pain if you're in Corona. I will tell you, though, just be careful, because you could say, hey, what about this condo in Corona? The numbers could look completely different, as opposed to, you know, the seven-figure properties in Corona will look probably more similar to this. So there's our price in Corona, basically down 3.5%, let's say, in 12 months, but still up 20% over the last 2 years. I mean, come on. And year-to-date change. As a matter of fact, I skipped that in the other charts. I blew by this year-to-date. I didn't focus on it too much, because what does that mean, year-to-date? That basically means, where have we gone in January? We've gone nowhere. We basically are flat. So this is the supply and demand. But again, look at this. Inventory down. Buyers in Corona came back. Look familiar? So there appears to be some confidence in the marketplace, at least by a segment of buyers that did not have confidence in the marketplace in October, November, and December. Was that just because people don't buy houses in October, November, December normally? Or was it interest rate driven? Or was it a combination of the both? I don't know, but it's not unusual for buyers to come back in January, and rates have been okay. So what did I just do here? Oh, I won't push the back button. So these are the homes for sale in Corona. Still more houses for sale, still selling fewer, but then we're comparing them to COVID years, so I'm not going to spend any more time on that. So where are we with interest rates? Last month's chart, I had the ugly. So this is the same thought I had with the ugly. It felt ugly when we did this presentation in January. It's basically improved since that day. What I think our last snapshot was January 10th. Rates have been getting better and better and better and better. And then the Fed kind of did their thing. The jobs report came out last week, and we started to give a little bit of that back, meaning rates have gone up a little bit. But if I had done this, I don't know, a week and a half ago, this would have been in the low sixes. Now, again, that doesn't mean that's the rate you're going to get. This is Optimal Blues Index, but it would have been It certainly wouldn't have been 6.2. It would have been 6.1 or 6.05 or something like that. But we've seen a little bit of an uptick. This is, and I know I've kind of got some words on top of it, this is 12 months. So this is what we've been doing. This is when we peaked in interest rates, but you can see we've started to simmer down. I think we're going to simmer down even more. Let me go back real quick. Today is February 10th. This was on Optimal Blue's website as of yesterday, so that's the rate you're looking at. For some reason, my Google machine earlier today would not give me an interest rate above or earlier than February 3rd. I don't know why February 3rd it was stuck on, because again, today's the 10th. If it gave me the 8th or 9th, I would have been happy. But again, Google machine says if I got an 850 or 750 FICO on a small 20% $300,000 loan, I'm looking at 6.4. Are you going to get a low 6, mid 6, high 6? I don't know. Call me, I'll hook you up with our lender, and then they'll let you know. It's all going to be different. I feel good about interest rates, though, guys. I really feel good about interest rates, and everybody that I'm looking at and trusting are telling me we're going to see interest rates low 6s, high 5s, and continuing, in theory, to drop even lower. I think that's just going to spur demand, and we might actually be able to cobble a nice little year together here, at least a stable one, which I would be happy for. Okay, one more little opportunity to say, hey, our forecast is coming up. Put it on your calendar. We hope to see you. Here's the same QR code I showed you earlier. Many of you guys said, hey, Lance, I'd like that free ticket. I said, text me. A lot of you folks texted me. So, but you got to text me. Shoot me a text. Say, Lance, this is who I am. Don't assume you're in my phone, even if I've known you for a long time. Just don't embarrass me. So I got to say, sorry, new phone. Who is this? Just say, hey, this is who I am. I watched your snapshot. Give me a ticket. I'll give you as many as you want. The venue holds. We're going to get 1,000 people there. The venue holds 1,500, so I have no problem giving away a bunch of extra tickets. So please come out and support us. We would love to see it. Not Riverside Convention Center. We're going to be at the Fox, and I think I'm done. So anyway, have a great February. Happy Valentine's Day. But our next snapshot will be the first week of March. It'll be the week before we actually do our market forecast. And our snapshot will be a little bit different in March. It'll be kind of more of a, hey, this is what you can expect when you come see us on March 15th. So anyway, hope you're having a great year. We'll see you next time.